You should migrate from Chia to Filecoin, boys. Good morning. Getting set up still. How's everybody doing? Crypto all over the place right now. All over the place right now. Make money here, make money there, make money everywhere. Oh, what the F is yawning? We're good. We're good. Not quite ready to start the show. Chatting with you guys a second. It's $10 per mega hash, good market price. I don't know. $7. Make it 7. Quincy, thanks for shouting out. I'm a huge fan of you too, just for being here. Jake Musk talking about LOL miner. Don't worry. We got that going today too. We got it all. Talking about all of it. Share the stream out, boys. One of these days I'd love to start cracking that 500 concurrent viewers a day for the morning stream. I'll have to see how it goes. Hashtag goals. Got to get those Red Panda mining concurrent viewer stats, right? Yeah, there's going to be a battle of power cost for a lot of people. Hopefully we'll figure out how to, as a community, help everybody do it. It's a lot of work. Prices down on GPUs. Profits up. We'll get into that today for sure. Got about 5 minutes here. Making sure I got everything sorted that needs to be sorted. Charging some things for a vlog later, probably. I have more work than I really want to get into. We got some of this K5 Pro thermal pad replacement grease. Since everything's getting real hot in there, we're going to be putting it on a couple of the faulty cards. We got another 3070 that's overheating. Probably my last Asus Tough to replace pads on. Last one to replace pads on for me, and then we got to start getting in. I ordered a ton of fans, but they're not here yet. Yeah, Ethereum Classic's pumping hard on hash rate difficulty. Someone's playing. Someone wants to know if they can make it work. That's what's happening. That's what's happening. People are starting to look. What is it? We're about to be into April. A couple months away from the proposed merge. People are going to start bouncing around all these networks. John Corey says, "That's Tech. It's 1 year since I watched my first ever video about mining and crypto by you. Thanks for all you do." Thanks for watching and the support. It's time for the ASIC miners. Don't worry, we're going to be talking about it. ASICs and Ethereum Classic. You know, when I initially had been saying that all the ASICs were going to move to Ethereum Classic from Ethereum, most people were telling me I'm crazy. They're blocking it, blah, blah, blah. We have confirmation today that that's definitely happening. And that's coming from ethereum.org itself. So we're going to be talking about that. Don't worry. But yes, Ethereum ASICs are confirmed to be allowed and encouraged on Ethereum Classic. That's the case. So what do GPU miners need to do? I guess they need to, well, the Polaris GPU miners, they really need to start pumping the crap out of something like Ergo. The rest of the miners need to start pumping Flux, stuff like that. A lot of Ethereum pools have Ethereum Classic as well. Ethereum Classic is the most widely supported. Just frankly, that's the case. And that's going to mean a lot, I think, in the merge, regardless. But we all are also going to talk about the argument against my kind of predictions of an ET or a Polaris friendly algorithm as well from mean hash today. We're going to be talking about that too. So if you guys have alternative opinions to what I have to say, you can always tweet it at me. I'll cover it as long as you're not, making personal attacks or doing anything like that. Because we don't really do that. Let's get into it. Let's get into it though. I'm going to get this recording and we're going to go. Boom. Let's go. All right. No chat until after. Bam. What's up, sons? Welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. And that is yours truly. I am your host. I go by Blind Run on the interwebs, or Son of a Tech more commonly, as that name has been taking off. And then my IRL name is Matthew. So there you go. Let's go ahead and talk about what we're getting into today. We have LOL Miner version 1.47 released with huge light hash rate unlocks available. You may want to start looking at moving over to that, including RTX 3050, or what appears to be the fastest RTX 3050 unlock available yet, along with the fastest RTX 3080 12 gigabyte unlock yet, at least presumed. We're also going to be talking about U.S. lawmakers introducing an e-cash bill to push the new digital dollar. Fun topic there. Remember, pro-blockchain, pro-cryptocurrency, anti-CBDC, fundamentally. We're also going to be talking about AMD and NVIDIA GeForce GPUs price falling to about only 25% over MSRP. We're going to be talking about, is miner concentration still an issue? Then we're going to be talking about Ethereum Classic post-merge and some predictions surrounding that, as well as just Ethereum Classic and ASICs. A lot of Ethereum Classic talk, and then we'll be talking about, of course, mining profitability for the day. We've had the whole weekend to see what's going on. We're seeing huge pumps in the market pretty much everywhere. Don't get excited about your single coin. We aren't seeing the kind of pumps we saw on Ethereum Classic over the past couple of weeks on everything, but we're definitely seeing, pretty standard 7 to 10% increase in price almost daily at this point, and a lot of that is just correlation to Bitcoin. Let's get into it right after a word from today's sponsor, which is yours truly. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. Boom, and we're back. It does appear something weird's happening with my Go XLR, so if we continue to have any issues with audio, please let me know and I'll get it covered. First things first, we always like to cover the new miner releases. We only have one for today that I could find, and that's going to be from LOL Miner version 1.47. It came out 3 days ago, probably right after our show, essentially on Friday. And there's a lot of changes here. So note, at the moment, the release is Linux only because testing the new scheme on Windows will take us some time. Be patient, please. That's fine if you're on Hive OS, you're golden. Just go in there, make sure that it gets updated to the new one, and you should be ready to rock and roll, especially if you're running light hash rate GPUs, because the first change here is LOL Miner bringing you the fastest public ETH hash light hash rate solver. 78% increase on GDDR6 and 76 to 77% increase on GDDR6X NVIDIA Ampere cards. The exceptions include 86% on the RTX 3060 V1 with driver 460.39 or older. Now remember, if you're on Windows, you can get that developer driver and get 100% on the version 1 3060. So that would be kind of preferred in this particular case, but they are getting really close at fully unlocking it anyways without that. So the next thing is 55 to 58% increase on the RTX 3050 and 3080 12 gigabyte. That's the highest we've seen for those two cards, and I'm definitely looking forward to testing that out. Fee on the new scheme is 1%. Other solvers are unchanged. Please read important notes section below, which we'll get to. They added support for light hash rate unlock in the 470.103.01 and all 510.x drivers. In fact, we highly recommend using these drivers because it will give a more stable unlocker experience. The parameter light hash rate tune now takes absolute percentage values to fix a certain percentage of unlocking. If chosen too high, LOL Miner will reduce the value to the maximum possible. The value will be tied to keep regardless of the number of locks this implies. This default is auto, in which the miner tries to balance the number of locks and recalibrations with the speed to achieve hash rate might change from time to time based on unlock quality heuristics. Cheaper locks. When unlocking, the miner will continue mining at a low speed to make the unlock procedure more cheap, essentially meaning that as opposed to previously when you would have the unlock fail, that card would stop mining, it would retune it and then let it mine again. Now, basically, it's going to just go down to its locked state, mine at that low level while the unlock is in process. That's actually super helpful because you're going to be able to submit more shares essentially over the long run, especially in the case that you're having like heat issues and other things that may basically knock that down. They reduced TON and Alphium fees in ETH plus TON and ETH hash plus Alph dual mining to 0%. You will only be paying the 1% fee on the ET hash in this dual mining. This also means no more unsafe connections to TON servers to collect fee in case you are in a country with mining restrictions, if your own TON connection is using Stratum over TLS. They added the new parameter silence that controls the amount of information the miner will print during its work. 0 is the default behavior. 1 will turn off new job messages, and 2 will additionally turn off the messages about found shares. 3 will leave the miner with the minute statistics only. They added an NVIDIA memory junction temperature readings on the cards as well, which a lot of miners have been doing. And they support on cards that support it. So GDDR6X customer GPUs, most professional and server GPUs, and so on. Here's the fixes. They fixed a bug with dual mining on light hash rate cards where the dual algorithm was mined with reduced rate after ET hash epoch change. And they fixed a bug with the compact accept switch here, not showing the sign on short or parameter, but sign on short statistics. Important notes about the new light hash rate unlocker scheme. They use 470.103.01 or 510.x drivers. They have turned out to be much more stable in unlock and testing than older drivers. The miner software needs to learn certain aspects about your cards over time to optimize for best balanced pool hash rate. The needed calibration will be better over time, but the things learned are too complex to display them or store in parameters. Therefore, in automatic mode, the miner might start with a slightly slower hash rate at the beginning, but will get better over time. In non-automatic mode, you might see more recalibrations during the first hour of mining than normal. If the number keeps too high after that point, lower the requested percentage value. As a consequence, the longer you can keep it running, the better. Avoid frequent restarts of the software. Some tips here that I think like a lot of people maybe miss, especially like on the light hash rate GPUs, is not overclocking the memory, because essentially if you're doing that overclock or that you need that to get tuned in, it may be best to just make sure it's running all the time so that information gets stored. I haven't really been overclocking the memory on any of the light hash rate GPUs unless I'm mining a non-ETH hash coin, just to be clear. I do, however, set the power limiter, essentially, or absolute clock on the core, just depending, because you don't want absolute clock on the core if you're also going to be dual mining. Just a couple things that I've experienced. As a consequence, they reiterate, the longer you can keep it running, the better. Avoid frequent restarts of the software. Once again, that's going to be like overclocking, cooling. So if you're having frequent restarts and it seems like maybe your memory is overheating, make sure you take care of that. Dual mining with ALF and TON is supported, as well as doing ZIL dual mining. When ZIL, makes sure to enable ZIL cache is used on all the light hash rate cards, because the recalibration is needed on every hard epoch change. So that's going to be important, because essentially you do have to have that same unlock on ZIL cache. And the way dual mining works on ZIL, that like I think a lot of people misunderstand, is that you're not mining ZIL at the same time that you're mining Ethereum, because ZIL is only processing a block every certain amount of time. I think it's like every hour or so. So whenever that is going through, essentially the miner hops over to that. Now it is still ET hash, so what ends up happening is you stop mining Ethereum completely and you mine ZIL for a little bit. And then once ZIL is completed, it bounces back to Ethereum. What they're saying here is essentially you need to keep that cache pulled over from the light hash rate unlocks so that essentially it doesn't retune every time it bumps between ZIL and Ethereum. Try to keep your settings as stable as possible, especially set clocks that your GPU can keep without running into thermal throttling. Also use lock core clock with no set power limit to maintain a stable GPU core clock for ideal results. Having GPUs freely changing their clocks and sometimes running into power limit will invalidate a lot of the data collected and decrease efficiency of the unlocker a lot. Same applies to memory clock. Do not change it after the calibration did start. Use the light hash rate wait parameter to delay the initial calibration until you are done with your settings. The initial configuration takes approximately 3 to 4 minutes from the moment the DAG was built. Keep away other workloads from your GPU, such as connected screens. Also, CPU mining is in parallel to the new unlocker is untested and might give unexpected results, which could be very relevant because like I'm mining essentially with CPUs and GPUs on some of the same rigs, right? I do run into some issues. For example, we have a 3600 XT that's currently overheating or was overheating with Precision Boost Overdrive on. And I turned off Precision Boost Overdrive. And because I was kind of trying to get some stuff done with the kids for the weekend, I didn't really want to deal with it. I just turned off the CPU mining on that particular rig because A, it's not a ton of profit. We're not losing a ton of things or whatever. And B, I just needed it to be stable to get through fishing and baseball and all that sort of stuff. So we'll be working on that this week, actually probably taking that apart, trying to apply some new thermal paste, see if that resolves it for us. And then if not, we may just have to upgrade the cooler. I've noticed that on a lot of the dual mining machines, especially in the heat that we're starting to get, that the CPUs need a little bit more cooling than say like the aluminum block CPU cooler that comes with most of the processors. You can get some of the cheap like Wraith ones with the core, with the copper core, and they're not that expensive, and that's really what I think you should upgrade to. Now on my Threadripper and so on, I think we're at, we have, I think the 5950X and the Threadripper have Noctua NHD 15s on them. So there you go. There is, I guess that's done at this point. There is LOL Miner version 1.47. It's looking like LOL Miner's just continuing to stay top dog for GPU miners and is super awesome. Let's talk about U.S. lawmakers introduce eCash bill in new push to create a digital dollar. Now, once again, as you guys have heard from me before, I support cryptocurrency. I do not support central bank digital currencies. And this is based on the fundamentals of Bitcoin. Yes, I still adhere to those. So to give you guys an idea, Bitcoin, just let's go over it again. It's meant to be a peer-to-peer cashless system without the interference of a third party. Third parties most commonly known as banks or governments. Now, the point is to decentralize finance further and further away from these organizations and entities. If we go into something like a central bank digital currency, what you end up having a potential for, and more than likely, now of course there will be huge battles between banks and the federal governments over this, but you would move into the capability of the government being able to fully control that currency without the need of any sort of banks in this particular situation. And what that means is that you're further centralizing control of currency, which is the opposite of the fundamentals of cryptocurrency. So once again, I'll just say it, I'm pro cryptocurrency, anti central bank digital currencies. We have to make that distinction here. The eCash would be a digital analog to the greenback and would preserve privacy and anonymous transactions, according to an advisor on the bill. I highly doubt that, but let's get into it. A group of U.S. lawmakers say the U.S. Treasury Department may be the right government entity to create a digital dollar, not the Federal Reserve. If you didn't think it was suspicious already, it gets more suspicious, doesn't it? A new bill introduced Monday would authorize just that. All right, let's take a look at all of these people and put them on our don't vote for list, okay? We have Representative Stephen Lynch out of Massachusetts, a Democrat. We have Jesus Garcia, a Democrat 3. We have Ayanna Pressley, a Democrat out of Massachusetts. And we have Rashida Tlaib, I don't know that, I apologize, a Democrat out of Michigan. Put them on your list, boys. Introduce the Electronic Currency and Secure Hardware Act, the eCash Act, to direct the Treasury Secretary to develop and issue an electronic version of the US dollar with an eye to preserving privacy and anonymity in transactions. The electric dollar, as defined in the bill, would be a bearer instrument that people could hold on their phone or a card. The system would be token-based, not account-based, meaning if someone were to lose their phone or card, they would lose the funds. In other words, it'd be like losing a wallet with dollar bills in it. This electronic dollar would be deemed legal tender and be functionally identical to a physical greenback. Rohan Gray, an assistant professor at Willamette University, who consulted on the bill, told CoinDesk the bill is meant to create a true digital analog to the US dollar. Quote, we're proposing to have a genuine cash-like bearer instrument, a token-based system that does not have either a centralized ledger or a distributed ledger because it has no ledger whatsoever. All right. So here's the other problem, because like a lot of people don't realize that Bitcoin, part of why it matters, a lot of like why it functions well, is because it is transparent. Now you might not be able to always go down and connect the wallet to a single individual, but there's trust in the system because it's transparent and you can review the blockchain yourself. Anybody can review the blockchain yourself, and there's a public ledger. This is a key component of cryptocurrency. Removing that key component is basically detrimental to the entire system, in my humble opinion, including especially in relation to something like the US dollar. It uses a secured hardware software and it's issued by the Treasury, end quote, he said. This form of eCash would support peer-to-peer transactions and given the nature of its setup would support fully anonymous transactions. Now that's interesting. In this, it would differ from the proposals for the digital dollar, which are based on stable coins or other decentralized ledger tools. Blockchains are designed to track every transaction, and any transaction could be therefore tied to the sender and receiver. You should be able to, with of course the privacy coin technologies out there, be able to figure out how to keep a public ledger as well as protect the anonymity of the user while still maintaining a public ledger for review by the public. And I think that would be paramount in something that is deployed by the federal government. Personally, under Lynch's proposal, users would not be subject to any more severe know your customer rules than anyone trying to use cash. They would have to acquire the eCash dollars via a bank account, peer-to-peer transaction, or a store, but could then do whatever they liked with it. This is very weird. So this is a move away from the digital dollar, like we were talking the problems with it, and they're trying to appeal to the peer-to-peer anonymous crowd. But then they have very distinct issues here where you don't have a public ledger. I'm actually kind of curious on this move in general, and I still don't think the government should be maintaining this. Also, how do you trust them if there's no public ledger? I just don't, there's no trust there. None of this sounds right. Gray said this system could serve people who are unable to hold bank accounts due to minimum balance requirements or those who do not trust banks because banks may charge fees or free funds. You know, most people that don't trust banks aren't going to trust the federal government, especially if you're moving the control of it from the Federal Reserve to the U.S. Treasury Department. It's very odd. Everything about this just throws up red flags everywhere for me. I don't know. I'd like to hear your opinions, thoughts and opinions in the comment section below. Is this at least a little bit better than the digital dollar, where you would have a public ledger that's fully controlled by the Federal Reserve? Is it? Or is it even sketchier? Do you say, okay, well, what's going on here? Why do they want to do this? Is it because it makes it easier for them to manipulate it if there's no public ledger? Or is it truly because they're pushing towards adhering to more of the principles of cryptocurrency? Which one would it be? And it's very questionable in my humble opinion. It's very odd. So I thought we would bring it up today. Let's move on to AMD, Radeon, and NVIDIA GeForce GPU prices fall close to MSRP level, now only 25% more expensive with availability at its best since the market crash. AMD, Radeon, and NVIDIA GeForce GPUs prices are now just 25% above MSRP and are expected to return to normal by mid-2022, while availability is a non-issue now with store shelves stocked with GPUs and various options to select from. 25% more expensive still isn't ideal for graphics cards that launched back in 2020, but it's better than where we saw the prices hovering around a year back. From their peak at 3 times over MSRP to now falling to 1.25 times over MSRP, this is a huge improvement. Besides the continued improvement in prices, the graphics cards are mostly readily available in stock across the globe. The price fall is also having a negative effect, I'd say positive, on the scalping community. Individuals, retailers, and distributors who tried to hold on to their scalp cards bought at higher prices, expecting they could fetch a higher price later due to the huge crypto and gaming demand, but now have to sell them at much lower costs due to the price fall. As for now, major EU and UK retailers are seeing GPU price inflation up to 25% for both red and green teams, and this is actually happening much earlier than anticipated, another thing that scalpers did not expect. Now, we had talked about this. We're seeing in Q2 of this year, which is now about to be in full-fledged, right? We are going to see the most manufacturing since Q2 of 2018. And that does mean we will have more stock. To compound on top of that, it is important to note for the cryptocurrency, or from the cryptocurrency mining perspective, what's happening across the globe is increased energy costs, especially in the UK. So seeing the price reduction happen first in the UK is unsurprising, because at this point, their cost for the power to mine on them is much lower. So retail GPUs will stay on the shelves longer in the UK, because you're not going to have the same ROI that you would if you've locked in a good price for power in other regions. Now, the US is also experiencing some of this too, but it depends on your geographical location within the US. i.e. Texas is going to have a lower power cost than California or New York, where it's nearly impossible. Of course, there are some cities and outliers like Plattsburgh in New York that do have low power costs due to their massive hydro plants, but they're also having a lot of issues with miners there anyways. And we've gone over that story last week, and I highly recommend watching the clip from it. And this is actually happening much earlier than anticipated, like they say. Let's move on. Most reports pointed out that supply shortages and pricing inflation would last throughout 2022, but now new reports seem to suggest that we are returning to MSRP levels by as early as May. In an interview with TechRadar, UK retailer Box reports that they expect attractive pricing to return to the consumer graphics card segment in May, which is a month away considering we are at the tail end of March. This is from Tyler Davies at TechRadar. He says, quote, "I do expect GPU pricing to realign with where the market used to be, given the boom in the market is now coming to an end. By the end of April, beginning of May, we should start seeing things return to a more attractive price. As for the prices shared by 3D Center, they are listed below. And you can see here we've gone down from March 6th at 141% to March 27th at 125%. And then you can start to see, as far as Euro, right, UK pricing is starting to come down quite a bit. You can see the 6,500, let's see where the lowest ones are, maybe down here somewhere. You have the 6500 XT down to 219. You have the 6600 still around 400 euro, right? 500 euro for the 6600 XT, 750 euro for the 6700 XT, 1,000 for the 6800, 1,099 for the 6800 XT, and about 1,350 for the 6900 XT. If we look at, of course, the NVIDIA prices, it's kind of going to be the same story, still a little bit over, right? What the list price is going to be. You're looking at best prices here, maybe like 330 euro for the 3050. What do we got here? Maybe like 470 for the 3060. Kind of goes on. Let's see, 3060, 630 maybe, somewhere around there for the 3060 Ti. Around 729, 730 for the 3070. And it goes on. Does that mean the US is going to follow in this price? I don't necessarily think so, because what we're starting to see is an increase in difficulty, an increase of price on the GPU mining market, thanks to, of course, the recent pump. I think a lot of people may FOMO into mining, especially with the kind of, even though we have the impending doom of the merge for Ethereum, we still also have essentially other mineable coins that are starting to pump up, and interest is kind of kicking off, and people are like, maybe I can still make this work. Even myself, which we had talked about in a vlog last week. You know, definitely some of the anxiety surrounding GPU mining, some of the stress involved in it when we're looking at pricing and pricing of the GPUs and scaling it, along with the pricing of the energy costs going up and the actual profit and revenue going down. So I don't know. I think that there are enough people. I know for a fact that like Founders Edition GPUs in the US are still very, very difficult to get your hands on, and they are getting picked up by scalpers when they drop at Best Buy. That is still a thing that's happening. A lot of the third-party cards are getting ignored now, though. So there is a little light at the end of the tunnel there for GPU pricing. NVIDIA GeForce GPU prices are now mostly settled in between 25 to 35%, with the RTX 3080 Ti being the most attractive option at just 7% above MSRP. That is, and that's a little, That's a little deceptive because at the time of the 3080 Ti release, they did release it at a higher MSP than you would have expected. And so just 7% above an already inflated MSRP cost isn't really indicative of the market. I think you would actually see a drop from the 3080 Ti below MSRP and a readjustment of the MSRP to be on level with the rest of the series. That is followed by the 3090, which is 17% above MSRP. Unlike the 6500 XT, NVIDIA's most entry-level GPU, the RTX 3050 is slightly more inflated at 22% above MSRP, which is actually extra interesting because their performance in mining is not necessarily that great. So it's not a mining thing that's inflating that RTX 3050 price. We also recently reported on how the graphics card prices are coming down significantly, and we expect even better rates in the coming months as the cryptocurrency market corrects. This is kind of funny as we see the cryptocurrency market not correct and actually go completely opposite of what all of us, I think, at this point were really expecting. I was expecting a bear market. Honestly, I was expecting another cut of 50% of profitability. I was expecting it to really kick in right about now, and it's going the opposite direction. Does that mean it's not going to correct and we're going to lose, more and cut down 50% of the profits? No, it doesn't mean that it's not going to ultimately recorrect down there. But for now, definitely looks like it's going the opposite direction. We've broken a ton of resistances over the weekend, and 50K is not out of the question for Bitcoin. Even hitting another all-time high of 60K or whatever, close to 70K, is not out of the realm of possibilities for Bitcoin at this point. And for Ethereum, it's really not out of the realm of possibilities to soar past 4,000 once again. So really, the possibility is there that this spikes all the way up once again. And then we have all this question surrounding, like, is GPU mining going to go away after the merge? Are there any networks going to be able to handle this? And we are starting to see price discovery on multiple alternative GPU mineable coins, from Flux to Ergo to Ethereum Classic and even Ravencoin. All of them are kind of spiking up enough to where you would maintain profitability on these. And there's enough of them that maybe everything's going to be okay. Does that mean for sure it's going to be? No, we could see essentially the merge happen. Everybody try to move over and tank all of these different altcoins. But in general, what we've seen in the past from GPU mining, what built Ethereum was GPU mining, because what it does is encourage participation within the network. Because if you have people invested into your currency with hardware, they're a lot less likely to go ahead and just dump all of their coin at a loss for, of course, their operations. And they are more likely to participate within the ecosystem while the prices are down to maybe increase their profitability through liquidity or buying NFTs or whatever it may be. So it's really, to me, it's up in the air from that perspective, right? I think that it really will come down to seeing how GPU miners respond. And I think, like, if we respond in the way that we just start basically supporting other networks and participating within them, it will encourage the retail market to actually move over because they will see these price increases happening. I think the retail market has already started getting interested in Ergo, thanks to, of course, its kind of close relation with Cardano. We saw it, of course, with Ethereum Classic, and more people are starting to realize Web3 is definitely powered better through a hybrid kind of proof of work scheme. And I think Flux is going to be kind of at the forefront for that. Not to mention also, we saw a huge spike in Filecoin. Now, we've talked about the problem with persistent storage in Web3. Filecoin is one that could potentially solve that, depending on, how far along the network gets and so on. But it's definitely a better option to fix persistent storage with cryptocurrency from that perspective than just with hard drives, than to just use hard drives as a bingo card for Chia as an example. So I think that's why you're starting to see the realization of these pieces that are needed to power all of Web3, and proof of work makes a lot of sense there. Let's go ahead and talk about, is miner concentration once again jeopardizing Bitcoin? This is coming from CoinDesk. It will be an opinion piece, I believe, but the high percentage of hash rate now located in North America may look like China 2.0, but the reality is more complicated. One of the main pillars of Bitcoin's value proposition is decentralization. Why then does the computer processing power behind the largest cryptocurrency seem to be concentrating again in one place, this time North America? The answer is multifaceted, but some of the main reasons come down to where it's the safest in this geopolitical environment and most profitable for the miners to operate. Following China's sweeping crackdown on the country's crypto industry last year, miners packed up their businesses and fled to other parts of the world where the geopolitical situation is more stable and cheap power is plentiful. They moved largely to North America, particularly to the US. According to a report released by Cambridge Center for Alternative Finance, in October, the US accounted for 35.4% of Bitcoin's global computing power or hash rate. At the end of August, more than doubling the 16.8% share at the end of April. Kazakhstan and Russia followed the US with hash rate shares of 18.1% and 11%, respectively, at the time. Meanwhile, mining operations in mainland China had effectively dropped down to zero, down from a high of 75% in September of 2019. Most recently, the digital asset investment firm CoinShares said in a research report that the largest global mining country is the US, with an estimated 49% of total global hash rate located in the region as of December 31st, 2021. This concentration counters Bitcoin's promise of a decentralized network, where in an ideal world, hash rate would be evenly distributed globally. But the reality is far from ideal, and given geopolitical instability in some key regions, the trend of miners moving to the US is likely to continue. Quote, ideally, miners would distribute Bitcoin's hash rate across the globe in multiple jurisdictions, but they will migrate to the most favorable business, energy, and political climates they can find. That's why they are coming to the United States, end quote, said Colin Harper, head of content and research at the crypto software and services company Luxor Technology. It's not hard to see why a miner would rather be in North America than anywhere else, as lawmakers worldwide are starting to clamp down on crypto miners. Kazakhstan, which was a popular destination for miners leaving China, called for higher taxes, cut off power, and crack down on illegal mining operations. In February, Hong Kong-based cryptocurrency miner BitMining halted its near $10 million mining data center construction project in Kazakhstan, citing unstable local power supply. Furthermore, recently a proof-of-work ban narrowly failed to pass in a European Union Parliament committee vote. Russia has its own geopolitical problems at the moment. Having assurance that a whole industry will not be just uprooted or disrupted overnight by the government is one of the main considerations for anyone planning to start a business, particularly in such a young sector as crypto mining. This arguably makes the US, with its constitutional protections and federal system, the safest place for miners to set up. Quote, the United States is one of the better countries to experience hash rate concentration because the United States federal structure ensures strong rule of law and robust states' rights, end quote, Luxor's Harper said. This is also why I think you can see concentrations in places like Texas and not in places like California or New York, right? The basically states' rights in the US is what is driving a lot of this. And Texas, who is adopting cryptocurrency and helping with the power infrastructure to expand support for Bitcoin mining, is very attractive. And because of the rights of the states, we don't have to worry as much about federal government interference, at least right now. Make sure that you're going ahead and voting properly so that we can maintain this, right? And this is why we talk about it. Particularly after miners got burned by China's ban, a repeat of such total disruption to business would be costly, especially given the sector has become brutally competitive while margins sunk from their peak of 90% to between 60 and 70%. Quote, if it had been that a single country hosts a large percentage of the network hash rate, then I am glad that this is in the United States, given its federated system in which individual states have large autonomy over lawmaking within their borders, end quote, said Jurica Bolovic, head of mining at Foundry, a subsidiary of Digital Currency Group, which also owns CoinDesk. Quote, that diminishes the risk of abrupt countrywide ban on Bitcoin mining like we have seen in China, end quote. Or as Brian Bullitt, CEO of mining from Bit Digital, put in October, quote, nobody wants to operate in a region where they face existential risks, end quote. Dave Perel, CEO of data centers operator Compute North, said that the U.S. also has better access to infrastructure and a lower cost of power. We already discussed this. However, such a large concentration of miners relocating in the U.S. has started to draw ire of lawmakers and regulators alike, given these firms' massive demand for energy. In March, the Environmental Conservation Committee of the New York State Assembly voted to move along with a proposed law that would ban proof-of-work cryptocurrency mining for 2 years. Meanwhile, some federal lawmakers, led by Senator Elizabeth Warren, of course, have scrutinized crypto mining companies on the climate impact. Most recently, the U.S. Securities and Exchange Commission, SEC, proposed a new regulation that would require publicly traded companies to report information on greenhouse gas emissions and risks related to climate change, which would affect miners due to their energy consumption. However, the mining community, for the most part, welcomed this proposed rule. However, it's doubtful that Washington will try to ban digital asset mining altogether, as many states have already embraced the industry. Quote, it's unlikely that the federal government would move to ban or disrupt mining, and if they did, the decision would have to go through federal courts, not to mention the fact that states would fight tooth and nail against proof-of-work prohibition, Harper said, especially Texas, because you have to realize that, like, one of the great things about Texas in general, just for this entire ecosystem, is going to be its influence from the total GDP. And it is one of the highest for states, and it's one of the only ones that is really, like, if we're being honest, is very bullish on Bitcoin mining. That's just a fact at this point. To complicate matters for policymakers, the mining industry has already turned into a multi-billion-dollar industry. In February 28th, research note Wall Street Bank B. Riley's analyst Lucas Pipes wrote that the industry has already grown to almost $100 billion US in gross value of Bitcoin being mined. Most simply, to derive total industry value, we multiply coins to be mined times current Bitcoin prices plus transaction fees. Today, this value is approximately $92 billion US, he said. Using a Bitcoin price of $38,000, which has now gone up about $9 grand already, if we look up here at 47, pretty much almost 10 grand at 47,739. Such a large industry will likely be hard to strike down completely in a short period of time. Another threat to Bitcoin's decentralization is a handful of mining pools controlling too much hash rate. That's true. Quote, mining pools are by definition a centralizing force in the Bitcoin mining ecosystem, end quote. We've talked about this, and there used to be PETA pools, which was going to solve this. Now, I think it's Braid or something along those lines is now being developed on GitHub. I'm following it closely, but it's really, you only got like on GitHub the information about what they want to do. That does need to get solved, especially for Bitcoin. In my humble opinion, you need to have, you know, if you're a large Bitcoin miner, I think you need to have some sort of internal node, and then that needs to go out, and maybe that can be fixed. That was kind of fixed by PETA pool for a while, and then it kind of just dropped off because the profitability wasn't quite there as much as it was in large mining pools, right? So that should get solved, I think, eventually. I know people are working on it. They provide a service of aggregating hash rate from individual miners in order to minimize the inherent revenue volatility and provide stable payouts. Foundry US is the largest Bitcoin pool in the world with almost 20% of the total network's hash rate, according to BTC.com data as of March 25th. The concentration may seem like another threat to decentralization thesis. However, mining pools don't control the network and don't have a lot of clout because any miner can quickly change pools if there is any hint of foul play, such as censoring Bitcoin transactions, Bolovic said. Quote, furthermore, there are developments such as Stratum v2 that would, among other things, empower individual miners to construct block templates, taking that power away from the mining pools, end quote, he added. Stratum v2 is a new Bitcoin mining protocol that is being developed, improving on many aspects of the previous version Stratum v1, which miners use to communicate with mining pools. The improvements include more efficient data transfer and protections against network centralization. Quote, the full feature set of Stratum v2 offers the miner the choice to select their own transaction set and construct their own block templates, allowing miners to easily revolt against pools that misbehave on censorship to the detriment of the broader Bitcoin network, end quote, according to a recent research report by Rachel Rabarzovic, something like that, Rabarzik, a vice president at Galaxy Digital Mining. Quote, even if miners don't utilize this power, the mere threat that they could will deter pools from misbehaving, end quote. The numbers showing regional concentration and the mining pools outsized the market share of the total hash rate look like a threat to decentralization. However, as long as their motivation is profit, it would be counterproductive for the miners to attack the network by banding together. Quote, to hit on the point about the threat to decentralization, miners ultimately act in their own interests, end quote, Harper said, noting that they compete against each other and wouldn't stand to benefit by cooperating to attack the network that generates their income. And a purely malicious actor with no profit motive, says a hostile state, would find an attack difficult and expensive to carry out given the heft of the competition to mine blocks. However, such concentration does increase regulatory scrutiny for the miners from the country they are setting up in their business in, Harper said. Luckily, I think the United States federal structure provides unique insulation against a state-sponsored attack against miners, he said. So essentially, what we're seeing is a concentration from China over to the United States. It is definitely more decentralized as far as like geographically. You also have to take into account the fact that you can have external investors into basically U.S. mining operations. So international investors can invest in that a little bit more freely than they could in other regions just due to the structure of the United States. So there is potentially there, while the hash rate is technically in the US, it doesn't have the same government control that, say, the hash rate in China would have. So it's kind of interesting. And that is even proven even further by the ability of China to just shut off all the miners. Luckily, this was a threat that was always worried about, I think, previously, and that if China shut it all down, the network would basically be more or less secure. And it was spun up so quickly in other regions that this really ended up not ever being a problem. Now, I've been talking about Ethereum Classic and Ergo, specifically around the point of basically Polaris GPUs and an algorithm that is easy to migrate to. This is important to point out, I think, from our perspective to get other people's perspectives, especially Mean Hash here, who I would say definitely is more knowledgeable in a lot of cases than I am, just surrounding mining and so on. And he had a rebuttal to basically one of my tweets earlier, which I said, so to fully flesh this out, there's a circumstance where price discovery post-merge on GPU mineable coins will actually be determined by the amount of hash rate that moves over. The fact is Polaris GPUs are the most widely deployed, therefore Polaris GPU friendly is key. I do have a full thread here. You guys can go look at it on my Twitter. Now, MeanHash did reply, and he said, there are lots of ET hash coins, not just ETC. And that is true. You have Ubeak and quite a few other ones, but a few with more active development. That's debatable now. Really, development on Ethereum Classic started taking off in December. That's when essentially the first DEX was launched, was in December of 2021. And now we already have essentially a lot of NFT projects moving over, including a Classics Apes version, some kind of... The problem I see primarily with Ethereum Classic, and I'll just be straight up front, especially as retail investment is concerned, is the name. Because Ethereum Classic, it sounds old, outdated, it sounds like it's abandoned. Just the name sounds abandoned. The fact is it's not abandoned. But a lot of the NFT projects are also naming themselves Classic, like Classic Apes and so on. So I think a little bit from the retail perspective there, just from perception, could basically make it feel like or sound like it's kind of outdated and not a thing anymore. However, I would argue that it does have more development, at least in the recent months from December till now. I would rebuttal and say it looks like it's having more support than and more development surrounding it than a lot of the other ETH hash options. We'd have to start pulling up, of course, GitHubs and so on. And this is something that I'm definitely starting to look at more closely. He does say, however, my guess is most 580s will be dead and Ethereum Classic will get overrun by ETH hash ASICs, which will cause the price to collapse, not rise. Other ASIC resistant coins will see price discovery though. So what he is essentially saying is that because Ethereum Classic will have the ASICs moving off of Ethereum and basically taking over the Ethereum Classic and other ETH hash based algorithms, that the price will actually crash. I don't necessarily believe that to be true personally, because I think that that will go towards the price discovery. Everybody sitting on these Ethereum ASICs have to be more invested within Ethereum, like ETH hash coins, and making sure that the price discovery is there than anybody else. Because if they don't, all of that hardware is essentially useless. And I don't think that it would necessarily cause it to crash, because what we're seeing is an acceptance, and I'll show you guys here in a second. We're seeing an acceptance of the ETH hash ASICs onto Ethereum Classic, whereas even just a couple months ago, the idea was either go full on, like basically ASIC resistant, or move over to an ASIC only algorithm with Kekek, the new Kekek 256 or whatever. Anyways, that's been abandoned now, so we don't really have to worry about it. However, I think the adoption of this is what they're seeing is this potential for participation from for security. And really, if you really want to take over, you really want that additional security as much as possible. So I think adopting that security is actually a smart move, personally. That's how I think about it. Now, he is saying that the 580s will be dead. Is that necessarily true? There are other options. If you have a bunch of 580s, even though they're paid off and they've paid themselves off multiple times, isn't it your goal to continue to garner some sort of revenue out of it moving on? I would think that you would want to generate as much revenue out of any asset, including 580s, if possible. He says that anyone with 580s has them completely paid 10 times over now, and they will have no problem dumping them on the market for $100 a card when ETH moves to proof of stake. And then I said I would be buying them at that price. To be honest, I'm probably a dummy though. And the thing is like, if I can get 30 mega hash a second at $100 a pop, and you know, feasibly, or I think it's like 50 mega hash a second or something like that on Ergo, and secure that chain with the 580s, seems like a pretty good solid investment to me. A lot of people started ditching like the 4 gigabyte GPUs last time, and those were dropping to like $75, the Polaris 4 gigabyte GPUs, and you're able to buy a ton of those. Now, a lot of people weren't buying them, but some people were, and the people that were are doing really, really well now off of those, thanks to, of course, the reduction of the DAG on Ethereum Classic, and in combination with alternate options that are friendly to Polaris GPUs like Ergo. So let me know what you guys think in the comment section below. I want to bring up, you know, alternate views here, and I think that Mean Hash has good points there. Then I got another tweet from me. I did mention that GPU mining profits are up 25% this week, in which case I did get this reply that was basically Gettr here talking about the Ethereum Classic update on their hardware, specifically ASICs. Now, we have that kind of here as well. And ASICs, or application-specific integrated circuits, are specifically manufactured chips that are designed, as the name suggests, to mine just one specific algorithm. Originally, due to the memory-intense requirements of the DAG, ETH hash was fairly resistant to ASICs, but with time, like all profitable algorithms, there was a big incentive to build ASICs for ETH hash, which did come to market. A range of ASIC miners, Ethereum Classic, are available and can be found by searching online for them. and check the manufacturer specific. So they already are kind of supporting ASICs here within their how to mine tab. And then they're talking about here, Ethereum, basically ETH hash miners migrating to ETC hash post-merge. First off, we welcome to Ethereum Classic. We welcome you, I guess. They welcome this to them, of course, because they are saying thank you for securing the original Ethereum network, which launched in 2015. Ethereum Classic has a long commitment to proof of work consensus. By the way of the core devs call 22, the Ethereum Classic network publicly signals continued support for ETC hash mining algorithm through the foreseeable future. This reaffirms Ethereum Classic's principles of fostering a decentralized proof of work mining ecosystem. This confirms a continued long-term commitment to the current mining ecosystem participants and their GPU and ETC ASIC equipment. So, the Ethereum Foundation is expected to migrate its EVM network to proof-of-stake consensus in Q2 of 2022 through an event labeled The Merge. We recommend planning your equipment migration to ETC hash prior to the merge. And what you guys have been seeing on the networks with huge pumps to solo mining on ETC and solo mining on Ergo and all these different networks kind of having these spikes go around, what you're seeing is miners listening. I think listening to specifically Ethereum Classic saying, go ahead and prior now, start to get ready. And if you have a large firm, what do you need to do? You need to make sure flight sheets are functioning properly. You need to make sure that all your equipment can move over easy. There's no weirdness with like overclocks or anything like that, even though there shouldn't be. But you have a lot of moving pieces in large firms that need to make sure this is functioning. Now, I've already done it on my farm too. So you guys are aware that we were solo mining Ethereum Classic. We did go back to ETH, but we did do that for about a week. And part of that was just, making sure I understood, like, we have the flight sheet ready. We're good. We've been doing it with Flux as well. We've been doing it with Ergo. I'm going to continue to be doing that to make sure that whatever hits the ground running after the merge, I'm ready for. This merge event will disenfranchise the largest EVM's proof of work mining ecosystem. Ethereum Classic is well positioned to absorb much of this abandoned ETH hash rate. However, ETH hash miners might not realize that Ethereum Classic operates a modified version of ETH hash called ETC hash. In November of 2020, the ETC hash mining algorithm was activated on Ethereum Classic mainnet with the Thanos upgrade. This upgrade slowed the growth rate of the DAG. This has allowed GPU miners to operate their equipment longer on ETC hash than ETH hash. This assured Ethereum Classic would absorb any mining equipment obsoleted by ETH hash's DAG growth rate and organically grow Ethereum Classic's base level. Now that is very important. I said it when they did it. This was a smart move because already those 4 gigabyte GPUs start moving over to Ethereum Classic, thereby increasing, of course, the security, which then increases the trust in the network. And this is a super intelligent move, in my humble opinion, or was, because now they're set up to really start absorbing even more hash rate post-merge. Note, ETH hash ASICs will likely need a firmware update for ETC hash compatibility. Please contact your manufacturer and request an official firmware release for ETC hash compatibility. Additionally, some mining communities have already developed custom firmware for updating ASIC equipment to ETC hash. New ETC hash miners will find comfort in knowing that Ethereum Classic made a long-term commitment to proof of work consensus through the network's die-hard upgrade in 2018. If you're new to ETC mining ecosystem, you found a long-term home on Ethereum Classic, a battle-tested network where you can properly plan your mining business, capital, and operational expenditures around a predictable monetary policy and stable network that is widely integrated throughout the cryptoverse. The Ethereum Classic Discord has an active mining community to help you in your transition planning. Please join the conversation. Here's their monetary policy. New mining participants on Ethereum Classic Network may want to familiarize themselves with ETC's fixed monetary policy and the 5M20 emission schedule via the ECIP 1017. A visual countdown and chart of the 520M or the 5M20 emission schedule can be found at ETC is Money. Part of this is the fifthening that they're talking about, as opposed to Bitcoin where you have a halvening, which is the block reward getting cut in half. Ethereum Classic basically has an emission schedule that cuts down by 20% instead of course, the full halvening or 50%. So that is basically the policy, but definitely check out the description down below so you can go read about it yourself. We're running short on time for the show today, so I'm going to go ahead and just move on at this point. We have already covered this as well. Let's cover mining profitability for the day. And it is looking pretty good. Not pretty good. Very good. Very, very good. This is the best it's been all year, and it is continuing to rise thanks to the price increase of Ethereum, as well as, of course, just everything else. And while the difficulty is increasing, it's not increasing to the point to where we really have to see huge cuts in relation to the price. But I would expect difficulty to start rising again, depending on how much people are risk adverse or not with the threat of the merge. Now, what you can see here is that for the past 24 hours, we did $248 US and 0.073 ETH. Now we're projected now today for the next 24 hours to get 0.08 ETH, and that's for 5 gigahash a second on 2 miners. Now we did get a payout today of 0.073. We've been over. You can see here that we had one bad day and then everything started increasing again. Now I did have equipment down here, which we had covered on the vlog, but you can go watch the vlogs if you want. I'm going to be trying to do more. Either way, we are actually up. I think last week we were hitting, US dollar wise, we were talking about 200 to 220 US dollars a day. Now we're up almost $50. It's a almost a 25% increase in profitability on Ethereum, and it's looking really good. So welcome to a sigh of relief. And I hope that everybody's feeling a little bit more bullish on this, and especially in regard to, of course, GPU mining. Let's go ahead and look at miner pool. Look, here's the deal. I went back to solo mining on Flux. I probably shouldn't have. The reason for this change was because we had a hash rate drop down to under 2 mega solutions a second, which is where I was able to actually solo mine successfully when we previously did it. So personally, I made the decision to go back to that. Now you remember I made the video about the solo mining, and the hash rate shot up to 2.5 to 3 mega solutions a second. And solo mining with this amount of hash rate was not functioning. The reason I made the change was because I saw the hash rate drop. Now that I mentioned that, though, unfortunately, I may have to just completely give it up, but I'm going to stay on it until we hit one block, and we'll cover if it's even worth it. Have we hit a block yet? No, we have not hit a block yet. And if we were mining directly, we would be making about $12 to $13 a day. Unfortunately, we're not. Checking luck pool for our Varus coin hash rate, you can see that we lost one rig, unfortunately, which is the 3600 XT that I discussed at the beginning of the show. I'll be trying to basically get this fixed this week, and maybe we'll do a blog on it. I'm not sure, or a vlog. Let me know if you're interested. Most people aren't that interested in that, and it's really probably just going to be like thermal paste, but whatever. It's part of what we do here, maintaining the hardware, etc. I also have a lot of GPU maintenance to be getting to, and we're going to be doing that this week as well. Right now, though, we basically are at a total hash rate of 94.12 mega hash a second, which is netting us 1.25 Varus coin a day, as opposed to previously, which was around, of course, 1.5 Varus coin a day. So we're a little bit down, but that is just how the cookie crumbles when you're in the mining industry. If we take a look at the 3090 on what to mine and correct the Zell hash to reflect mini Z hash rate, we see Ethereum Classic at $5.06 a day after power. This is by far the most profitable that we have seen Ethereum be in a long, long time. To me, it's a sigh of relief a little bit, and you are still going to be beating out, of course, Nice Hash in profitability, which is interesting because mining directly means that essentially the price is growing too high before the speculators that rent hash rate are catching up. So I think that at this point, what we want to see probably is an increases in the rental hash rate. What I would like to see is basically Ethereum being more profitable on NiceHash than being profitable alone. And I just think that's the way it goes. Now, of course, if you're renting on NiceHash, you probably want to avoid renting and mining Ethereum Classic right now because this price is, still above what you can basically get Ethereum Classic for. Ethereum Classic's at $3.60 a day though, which is super relevant, and catching up out of nowhere is going to be NiceHash with a huge pump today, bringing it over the $3 mark, which is incredible, at $3.53 a day after power on NiceHash and $3.50 a day after power on direct, basically direct to a pool. We have Conflux at $3.32 a day. We have Equilibria at $3.33 a day. And then if we keep going down, we can find the usual suspects. Ryo still almost at $3 a day. Ravencoin at $2.84 a day. And I believe Ergo is pretty far down at this point. Yeah, so Ergo had that big pump and then they haven't really stayed up with the rest of these altcoins. It's at $2.65 a day. Interesting to see kind of like essentially Flux and Ergo flip positions from last week. Let's take a look at mining difficulty on the networks and network growth. We're at 218 exahash a second, which has increased over the weekend by a few exahash, and difficulty is corresponding in that. Let's take a look at Ethereum. And we would expect 1 petahash, and we are back up to 1 petahash. We saw a lot of testing going on over the weekend where we were bouncing as low as 968 terahash and then all the way back up over 1 petahash. A lot of this is probably a testing and discovery of larger farms on different networks, including Ethereum Classic and so on. Zill has been another one. Of course, that's not going to be solo mined, but because of the fluctuation of adding that into dual mining and the recent profitability spike due to the increase in price of Zilliqua, you might see a little bit more bouncing around going on these networks. And you'll probably see them on the smaller pools like you see here on Flex Pool, where it kind of bounces up and down and up and down and up and down and up and down. You can kind of see that happening right there. Let's take a look at Flux, as that is kind of the third most profitable right now. And what you're seeing is 1.96 mega solutions a second. So still under 2 mega solutions a second. For solo mining with 400 solutions a second, I'm probably going to avoid being above like 2.5 mega solutions a second, but that's just me. Let's take a look at Ergo. And what we're going to see is, this decrease in hash rate, which I expected from over the weekend and then coming back down. Now that's due to, of course, this difficulty spike. And right now is probably the worst time to be mining Ergo because they essentially, from this huge spike in hash rate on Ergo because of the profitability, network wasn't really able to handle it and it spiked the difficulty, and the difficulty hasn't corresponded in coming down with the reduction of the hash rate yet. So you're going to want to give that maybe a couple more days. And obviously it does look like, if we're talking about Ergo, personally, if I see the test go on like this, and we'll take a look at Ethereum Classic in just a second, but if we see it happen like this, then I'm saying whatever testing was going on the weekend for the merge and so on, doesn't look like it's successful for Ergo right now. Now that can change, but that's just kind of what I'm seeing. If we take a look at Ethereum Classic, what do we see? Do we see kind of the same hit? And no, and this is a good sign. So what we saw was a huge initial spike, then we kind of saw it dip back down, and now it's going steady. And that is steady for a few days with, of course, the difficulty spike in here. And on top of that, we're maintaining the second most profitable coin for GPU mining as well. So it is handling the increased hash rate from the tests to the point to where the miners aren't even moving back off of it at this point. That is a very, very good sign for post-merge signaling. And if we see the price continue to increase like it has previously, this is just looking fantastic for GPU miners in general, and even the, of course, ETC hash ASICs. Now, of course, what we're going to have to see here too is how many of those large farms with Ethereum ASICs have actually updated the firmware on those Ethereum ASICs and tested this out. That'll be the true sign. Right now, what I'm seeing is probably more just GPUs. It's only at 28.89 terahash a second. Let's take a look at Ethereum mining profitability on mining pools. For the last 90 days, Flex Pool in first, Mining Pool have been second, and Crazy Pool in third. For the last 60 days, Flex Pool in first, Mining Pool have been second, ZET in third. For the last 30 days, ZET in first, Flex Pool in second, 2 miners in third. For the last 21 days, ZET in first, Flex Pool in second, 2 miners in third. For the last 14 days, ZET in first, 2 miners in second, Flex Pool in third. For the last 7 days, ZET in first, Flex Pool in second, 2 miners in third. For the last 3 days, we have 2 miners in first, Flex Pool in second, Ethermine in third. And for the last 1 day, we have ZET in first, Flex Pool in second, 2 miners in third. Obviously on Ethereum, you have a ton of luck going on here. Your biggest goal as a miner is going to make sure that you have the best connection to any given pool. These places can shift based on basically luck and the size of the blocks that are being found, hence why you saw 2 miners 3 days ago being in first place and then dropping back down. It just is going to depend on how large those blocks are. Your goal as a miner is going to have the best connection to submit the most shares to whatever pool you're connected to. There are, of course, the fundamentals that we could discuss and why I don't mine on FlexPool, even though I used to, or Ethermine, even though I have in the past. And primarily that is due to censorship and the refusal of allowing people in Russia to mine to those pools. That is specifically what I would call, you know, an ideological move on my part. I do not expect you guys to follow that. That's just how I feel. And that is not financial advice. It's the furthest thing away from it. But that's where we're at. ASIC mining has not increased in profitability to the extent that GPU mining profitability has. As we see the Gold Shell KD6 still maintaining around 130 US dollars, not much different than it did on, of course, Friday of last week. The Inosilicon A11, however, has skyrocketed because of the mining profitability on Ethereum to 105 US dollars a day. We see the KD5 at $89.53 a day and the Antminer L7 at $54.87 a day. We also have the Antminer Z15 mining Pirate coin, which is going to be that privacy coin that was actually, just to be frank, it is a Komodo fork, just to be clear, just with privacy features built on top of it. This is the same thing I'm doing with SoCoin. You could say in general that like when I release SoCoin, I'm going to make it very, very clear that it's a fork. There are coins that are coming out that are not being as transparent about forking, because building from the ground up is very difficult to do, and I do not have the programming or coding knowledge to do that, but I still want to build my own chain and learn more. And I think that's a great way to do it, is to play with like the Komodo Smart Chain. Varus coin, by the way, is another one that is a fork. I think people should be more upfront about it. As far as Pirate Chain goes, though, it is important to also note that it's a smart chain, but it does have privacy features built on top of it, which is why I think you see this spike in the profitability on it. Is it worth buying a Z15 for? I'll leave that up to you. Do you really trust Luxor, or not Luxor, but Pirate Coin, ARG, to go ahead and continue? I don't know. Antminer D7 at $27.42 a day after power. And then really, if we scroll down to the S19 Pro, we are seeing an increase in profitability, but it's not that much. We're talking about $19.62 a day. On mining rig rentals, Friday, it was $17 a day. Interesting to note that we are seeing an increase in profitability on GPU mining and not an increase in profitability across ASIC mining. Will this be indicative of the future markets? It's really hard to tell. What we would hope as GPU miners primarily is that that would maintain the case, and we'll just have to see what happens. If we take a look at BT miners, which you can check the affiliate link down in the description below for, we don't have a ton of sales going on at this time. They mostly have remained pretty steady at what they're at. So, you know, you have essentially your S19 Pro at 9,900. I think the cheapest I've seen it on here was 9,500. You have the X5 850 mega hash a second for Litecoin and Dogecoin at 2,000. It is important to note that Dogecoin is increasing in profitability because it has had a spike here recently, and I don't think it's necessarily translated over to here, over to the calculators yet. That one will be something to keep an eye on, especially because you have the merge mining with Litecoin and Dogecoin, which will have the potential to increase your profitability. So it's something to look into. No huge price changes on the Ethereum Classic miners. Unfortunately, they're still just really kind of sitting at what you'd expect. 20K for a Silicon A11 Pro, 10 or 11K for the A10 Pro. Jazz miners are going for 11K for 520 mega hash and 9,500 for the 450 hash model. You can check out a review. I think, forgive me, I will link it down below. I forgot who did it now. I just watched their video on it though. I do not have any of them though. I don't know if I am comfortable with purchasing them at this time. So I don't know. There you go. Now, as far as coins that are pumping, let's go ahead and refresh this. For the past 24 hours, Filecoin, like we were talking about, in the past 24 hours, 30%. And you can mine it and provide storage essentially for them. Profitability calculators I don't have pulled up yet. We'll probably be covering that. Shiba Inu had a surprising pump in the past 24 hours of 15%, which is pretty incredible. And then looking for more of the kind of, let's see, so more of the mineable coins. We have 7.9% or 8% on Dogecoin. Let's see here. I think Ethereum was 6%, which we already knew about. And I think we just leave it there, like Bitcoin 6%. Everything else is just kind of following Bitcoin. But the 7-day market looks a little bit different as well, which is important to point out too. And that is this Zilliqa pump of 145% over the past 7 days. Now, once again, Zilliqa, you can dual mine with Ethereum, but you're not truly dual mining. It will skip over and mine Zill and then go back to Ethereum. I have not done a how-to on this. However, plenty of good channels have, including Red Panda Mining, if you want to hop into it right away. I will probably start trying to experiment with it because, you know, that profitability does look pretty enticing. We'll have to see if it really adds up though and kind of test it out. Over the past 24 hours though, or 7 days, excuse me, what other mineable coins are there? We have Dogecoin up 26%. That's what I was saying. Dogecoin was really pumping here recently compared to how it has in the past, you know. What else is in here? Ethereum Classic still up another 21% for the past week. So over the past 2 weeks, that's a 100% increase pretty much in price. Well, no, it's not. So it's up 20%, but it had gone down. So we're at 40, what was it, 47? I think that's pretty much the same as it was with the initial pump that went back down and came back up. Let's see what else we got though. That is a good sign though. Ethereum Classic is maintaining at least. I would expect it to break $50 though here soon. Or you would hope it would. Even with that pump in the Kadena price, the miners are not looking that good, unfortunately. Monero is up 15% as well. So there you go. All right, boys, I do not have really much time for questions and answers. I'll try to answer a couple here for you guys. We almost broke that 500 concurrent viewers. Oh my goodness. Maybe it happens this week. That would be absolutely insane. Thanks for all the support today, guys. And yes, Crypto Mikel did link it for me. It's Red Fox Crypto. And he did do the Jazz Miner review. So go check him out. Another fellow cryptocurrency mining YouTuber. If you have questions, tag @SonOfATech and let me know. We'll get questions in for maybe about 10 minutes here. Or you can also do a super chat, which is highly appreciated, never required, easiest to read, so I'll never miss it. However, I did miss a super chat from earlier because it timed out. I need to get a dashboard that will actually keep those up for me too. So thanks to whoever sent that $4.99 in chat revenue. Daniel Ring says, Asanvatech Doge is up 10% in profitability over the weekend for me. Yes, that's what I'm seeing as well. I'm not seeing it in the calculators though. C-Script says, Asanvatech, I've been thinking since only 21 million Bitcoin can be made, won't more and more of them end up dead in wallets no one can access because of human error and all that? Yes, of course that will happen, and that will drive up, of course, the scarcity of Bitcoin, which in theory will also increase, of course, the price of Bitcoin. What I do think what will happen is huge documentaries on people basically being treasure hunters or Bitcoin hunters. I think you will start seeing a massive amount of data farmers and so on going through trying to basically digitally hunt Bitcoin and abandoned wallets. I think this will be something that will be massive. I think if you really wanted to spin up probably one of the most popular YouTube channels in existence, you would get together a team of basically technical people that would go in and actually try to data mine lost Bitcoin lost Bitcoin wallets. That would be a fantastic series. We've seen a couple of them in the past, couple of videos here and there. They always do really well. I think that is going to be a massive market. I'm talking like we will see probably Netflix series just surrounding people, just surrounding like everybody around the loss of their Bitcoin wallet, the hunting of them, all that sort of thing. I think it's going to be amazing. It's going to be cool. Sean Voltas says, at Asanvatech, Red Fox Crypto reviewed the Jazz Miner. Yes. John English says, at Asanvatech, you rock. Yes. No, but thank you, man. Patty Scabby with $1.99 US. Thank you for that. $1.99. Let's go ahead and see. John Clement says, at Asanvatech, which of the new Intel GPUs are you interested in? The one with the 256-bit bus. Give me a big bus. Big bus GPUs make the world go round. You know what I mean? Dan Sand says, at Son of a Tech, just to clarify, when using light hash rate is always recommended to lock core, but the power limit has to be 0. No, well, go read what their specific, because LOL Miner made some changes there. Go click the link in the description. I have not tested it yet, but they do cover it. Pearl Rival says, Asanvatech, do you think the shadow merge is the beginning of the end? You mean the beginning of the end for mining Ethereum? Yeah, I mean, like, I think it's coming this year. Gandalf Gray says, Asanvatech, could you do a tutorial on how to mine Filecoin? I would love to give it a try. I can definitely try to do that on my on a VM or something. Jake Musk says, thank you for the $10 in NZ. I don't even know exactly what that is, but he says, if you were to buy an ASIC on low budget, would you, or is that New Zealand, by the way? I don't know. If you were to buy an ASIC on low budget, what would you go for and why? I mean, so if we're talking about Bitcoin, which is going to be longevity, then the M21S from WhatsMiner. Then if we were talking about an altcoin, I'd probably stick with like the L3 pluses, really, to be honest. But I'd really like to see those back below $1,000 a pop before I'm really feeling it. Before I'm really feeling it for sure. All right. Got maybe about 5 minutes to answer some more questions. Then I am out like trout. Which we tried to catch some trout yesterday and had no success. And I understand the term out like trout pretty good. Tag Son of a Tech with questions. Ali says, do you also buy crypto or mine only? And if there is a coin that is break even or slightly negative after the merge, will you continue mining? Yes, if it's break even, I'll definitely continue mining. And then I only mine crypto at this time. Boy Matthew says, at Tech, have you tried the Hive OS temperature for GDDR6X temperature display? No, I have not yet, but I am fully aware of it being out. Yes. For me, it's like I already know which ones have hot memory because their hash rate's bad. But it is what it is. Lobo says, that's Tech, you're the best. You're the best for watching and supporting the channel. Thank you so much. By the way, if you guys can hit that like button, I'd like to see at least 50% of the likes. 400 viewers, 200 likes. That'd be cool. Let's see. Losing with Larry says, that's Tech, hear anything about NVIDIA's BAM connecting SSD directly to storage? No, not yet. Shraft2K says, ask Tech, thoughts on 3090 Ti hash rate predictions. I think we already predicted it. And it was really going to only be like 10% better. So I think it was like came out to like 135 mega hash a second. Kurosaki's Corner says, ask Tech, thoughts on those ETC ASICs long term. I mean, like if Ethereum Classic handles the hash rate moving over, then the investment's good. But the question is can they handle what's currently out? The thing is that it does have a lower DAG requirement, so you could potentially get some of those older Ethereum they'll last longer, essentially, is what I mean, on Ethereum Classic. Wes says, do you use a CPA? If so, at what point should you consider hiring one? I mean, immediately, and yes, I do. Babelfish says, at Tech, shifted light hash rate cards to LOL miner yesterday. It's definitely an improvement. Picked up 25 mega hash a second on 2 8 GPU rigs. Awesome. Glad to hear, Babelfish. Dan San says, at Tech does $10 ETH per hash, I think per mega hash, to buy a GPU sound good for you, or wait for cheaper? I mean, everybody's predicting that we'll see, basic MSRP in May, which is a month away. However, I don't know. If this is another bull run cycle, then it's all up in the air. I don't really know. Blue Dragon Mining says, ask Tech, would it be better to mine Ethereum Classic to save it for a higher price or take the payout in Bitcoin? I think you take the highest payout and you buy the Ethereum Classic would be the play, right? Ty says, ask Tech, will ETH merge get delayed again? The projection from Bitsby Trippin is December. I tend to agree. However, a lot of people are saying June. It's just, like Vitalik said from the man himself. Some say June, some say July, some say August. I really don't know. Scott Schultz says, ask Tech, if you remind people to like early in the vid, that pumps the stream up in the live algo. I think I did ask at the very beginning, but I could do it more throughout the stream. Thank you for the tip. Daniel Ring says, ask Tech, how do you prefer limit on Hive for Polaris? The settings don't seem to do anything. Really, like for Polaris, you just flash the BIOS to what you want, and then it'll just kind of always run at that. Justin Pinson says, ask Tech, best 3080 Ti risers. I really like the AAA wave risers. They have all the lights to tell. They have the light on the single pin that goes into the motherboard. They have the light on the top. They're a little bit more expensive. But it's not going to be any different to use a riser for the 3080 Ti and something else, except for one important factor, which I still recommend not ever using Molex. But let's say you're like on a Polaris, there is like the rule where they're using one SATA connector per GPU riser. I just always say, always use a 6-pin. I prefer that. I won't condone anything else on the channel because I think that there's just too many variables to, recommend using a SATA or a Molex. So I definitely recommend the 6-pin adapter for your risers. NB says, at Sound of Tech, this was one of the best live streams you've done. Thanks. Awesome. Glad to hear, my man. Ty Hoon says, at Sound of Tech, will Ethereum Classic replace for ETH or Flux and Ergo? Will love you and have a nice day. I think there's a little bit of a language barrier. I think you're asking, will Ethereum Classic replace ETH? And that's still up in the air. Like I said, what we're starting to see, the good signs on the hash rate was, of course, the amount of hash rate that's maintained on the network since it started pumping, meaning the GPU miners that moved over to Ethereum Classic are not experiencing such high difficulty rates that they're losing a ton of profit right off the bat, as opposed to taking a look at Ergo, seeing the spike in Ergo over the weekend as what would presumably be a test, and then a quick drop off once that difficulty basically readjusted. And so I think if we're taking a look at, just as examples, Ethereum Classic versus Ergo and what just happened with the hash rates on the networks, Ethereum Classic is more prepped to handle the hash rate coming off of Ethereum than Ergo is. That's all I can really say, and that is definitely not including Flux or anything else. Flux hasn't really been tested at that level. We could say that Ravencoin was, and especially right before the halving, and Ravencoin didn't seem to handle it as well either, but I think that was also due to the halving. So it's a little weird as far as that is concerned. Crypto Moon says, at Simon Tech, if I sent the wrong coin to my own address, where does the money crypto go when it doesn't complete properly, i.e. it's gone? It's gone. If you controlled your private key and you sent TrueSD to a USD wallet, or I don't know what you mean by basic USD wallet. But if it's on the same network, like let's say, let's say you have an Ethereum wallet with a USD token, let's just say Tether on it, and that Tether is on the Binance Smart Chain, and you send it to your MetaMask wallet that's only connected to the Ethereum mainnet, then you could change the network within MetaMask to Binance, and it'll be there. A lot of people get confused with that, so that's why I mentioned that, is because like if you had Tether on Binance Smart Chain, you send it over, and then you're like, where is it? You may just need to switch the network within your MetaMask. Ali Shakir says, ask Tech, what do you think of riserless motherboards? I like a majority of them for sure. They're nice. They seem to work. And then, I don't know. It's just the way it is. Dan Sand says, ask Tech, on your personal opinion, if ETH 2.0 does not happen in the summer, do you think the price will drop? Do you think GPU prices will rise again? It's possible that the prices drop. It really depends, because you have to keep in mind right now, at least in my humble opinion, that a lot of what's driving Ethereum in general is going to be NFTs in the metaverse. And because everybody's so bullish on that, and really 80% of the transactions, I think last I checked on Ethereum, are around surrounding NFTs, a lot of people may not even care, right? So a lot of people may not even care necessarily about Ethereum missing their merge. But there is the case that a lot of people will care. I think like the institutional investors, and it just depends on if those like institutional investors are like, oh, they missed the merge, dump all of our ETH. I don't think they would, especially if the price is maintaining. And then as far as participation on the network, I don't think that that goes anywhere, because I don't think that retail investors are really that into the technology behind the NFTs that they're buying. Meaning, like, I don't really think that there are a lot of technical NFT purchasers out there. Like, I just don't think that there's a lot of them in retail. Most of the time, if I'm sitting like in the sauna and listening to people talk about crypto, it's very unimpressive. And I think that a lot of people aren't really educating themselves on the background there. And because they aren't educating themselves on the background, I really don't think that they give two craps about if it's proof of stake or proof of work. But the large institutional investors, I think they would be more concerned about it. So there's that too, right? But we're also talking about 80% of the network basically being these investors into NFTs that don't give two flying flips about the technology that's behind it. They only care about making US dollar. The Rookie Cookie says, Ask Tech, have you done a Cero video? No, I have not. Justin Pinson says, triple wave with lights, always use 6-pin adapter for risers. Ask Tech, thanks, man. I heard everything from you, or learned everything from you. Cool, man. Definitely go check out other ones, though, because there's a lot of good people. Thanks, everybody, for watching today. Hit the like once again. Subscribe. Hit the notification bell. Please share the stream out with everyone. You can check out the stream on Spotify if you ever miss one and you just want to listen to the day's stream, maybe on your way home from work on Spotify in the car. It works great, trying to push some people over there so they know that we're there. We're also on Rumble, but the thumbnails aren't really working for whatever reason in the sync. I'd highly recommend Library and Odyssey over Rumble, primarily due to the fact that it is blockchain and it is immutable. And no matter what, we will always have videos on Library and Odyssey, so make sure you check those out. For the time being, we will always continue to focus on YouTube until maybe we don't align with YouTube. Who knows how that will go within the cryptocurrency market. That's why we have the backups that we do. I will see you next Tuesday.